We entitled this week's SD Bullion Market Update video, Silver Price and Future, using COMEX data 1970 to 2022, in order to give silver bullion bulls like myself and many of you out there a roadmap ahead by looking backwards in time using price data and market forces. Before we deep dive into that data and those long-term silver price charts, first, a Merry Christmas, Happy Holidays, and a Happy New Year to everyone out there watching. Now let's begin by reminding ourselves about what the fundamental physical silver market went through in this year, 2022. It was recently estimated by Metals Focus, a London-based silver analyst consultancy, that this year the world will have demanded nearly 200 million ounces more silver bullion than we were able to supply from mining or recycling combined. Not a surprise to those of you who have been paying attention, because throughout this year we tracked that nearly 400 million ounces of industrial-sized silver bullion bars moved out of the combined COMEX and London silver warehouse networks, much of which was in order to help meet record worldwide silver demand throughout this year. While myriad industrial uses for silver continue to steadily grow, it was a combination of two major silver demand forces that made this a record year for silver in 2022. This Indian silver import chart is only updated through last October 2022, but you can see it already reached a record high level. It's likely India will have imported some 300 million ounces of silver for this year. Then we have the Western world physical silver bullion stacking crowd, which also piled in this year, stacking about the same figure that India demanded respectively. Roughly 300 million ounces went to their respective silver stacks in investment-grade silver bullion coins, silver rounds, and smaller silver bullion bars ranging from 100 to 1 ounce sizes. A bit of sad news to report this week. Longtime silver bullion bull and bond market trading legend Scott Menard passed away this week suddenly after suffering a heart attack during his regular powerlifting exercise routines. While he left this world seemingly early and suddenly, I'll not forget his December 2011 warning to viewers about the long-term future for silver bullion and for fiat paper currency. Being uber bullish still on silver bullion only a handful of months following silver's failure to eclipse its still seemingly ancient 1980 nominal price high of 50 an ounce. Have a listen again to what this former New York Federal Reserve investment advisor had to say about silver just over a decade ago.
As our next guest says, stocks are a good bet. He's looking here in the United States, even overseas a little bit maybe over the next decade. But what about silver? Why silver, Mr. Scott Minerd? He's Chief Investment Officer at Guggenheim Partners. He has more than $100 billion in assets under management. That was the one thing that jumped out at me. Come on, man.
Silver?
Yes, why silver?
Well, look, I tell a story to people when I give presentations. At the end, you know, when I talk about interest rates coming down, as I've been talking about for years, people were so concerned about inflation. And it's the way the story ends is this, right? We are carrying around in our pockets chits of paper. Mm-hmm. And in 20 years, we're going to be talking to our grandchildren. And we're going to say how we used to take these pieces of paper out and hand them to people, and they gave us things of value in exchange for them. And then our grandchildren are going to look at us incredulously and say, "Oh, Granddad, how stupid do you think I am? Everybody knows that paper money isn't worth anything."
You really believe that's going to happen in 20 years?
Yes.
That is Weimar Republic. I'm paying my rent with butter.
Right. Well, I don't know that we'll get that far, but if you look at the history of the price level in the United States, between the early 60s and by the time 1980 came around, the price level had quintupled. Mm-hmm. When I talk to people today and say, why should any of us be surprised to find out that in 20 years that the median family income is $250,000? Matter of fact, at that point, everybody will be in the 1% because they'll all be over $1 million.
But don't you? Isn't there something though that central bankers can do that will prevent this from happening? I mean, you talk about it as if it's an inevitability.
Well, when you look at the scale of what the Fed has done in terms of creating money, and then you consider the fact that we're probably going to get even more QE in the United States, and ultimately the way that they will err is allow the price level to adjust up rather than run the risk that they take too much liquidity out of the system and put us into a severe downturn.
Hello there, on behalf of SDBullion.com, this is James Anderson with a quick SD Bullion Market update. Before we go further, please smash the like button so other sound money stackers can also see this content. And be sure to subscribe to our SD Bullion channel so you can get our latest market coverages and also a chance at winning incredible bullion giveaways like this one.
Get ready for SD Bullion's Monster Box sweepstakes that includes 500 Silver Eagles. You could be the next lucky recipient of a phone call like this.
This is Dr. Tyler Wall, CEO of SD Bullion. Well, I'm calling you to let you know that you won the SD Bullion giveaway of a monster box of Silver Eagles.
So click the link below for your chance to win.
Click the link below to enter our new 500-ounce American Silver Eagle coin Type 2 giveaway contest. And good luck to all of you who take part. Silver and gold markets in fiat Federal Reserve note terms had slight increases in nominal spot prices in this week's trading. The spot silver price is closing just under $24 an ounce, while the spot gold price ended around $1,800 an ounce bid. The gold-silver ratio fell slightly to 75, all while the modern world continues physically mining it at a high single-digit ratio. Sarcasm aside, we're going to take a deep dive and use long-term silver price data in order to garner a better idea of the potential road ahead for silver's future price. In a higher, more inflationary world, the white precious metal is poised to do something akin to what was accomplished during the 1970s into early 1980. Back when spot silver ran bottom to top in a 38-fold in its nominal spot price. What if I told you that since the beginning of 1970, starting at a spot silver price of $1.92 an ounce, that throughout the last nearly 53 years, during New York COMEX trading hours, the price of silver has traded downward, aggregating to only 15 cents over the more than 5-decade time span. This chart has real price data, and so generally you can see that the shorts on the COMEX have won for longer durations over time, betting silver price to fall. I know, you might be thinking, well, the current silver spot price is $24 an ounce, so this data has to be incorrect. Well, it's not. Starting again in 1970 at $1.92 an ounce, adding up silver trading data outside of COMEX silver trading hours, over the last now nearly 53 years, the price of silver outside the COMEX has ballooned, aggregating to $289.84 an ounce as of yesterday's data closed. Of course, this data and a fiat Fed note probably won't get you a cup of coffee anymore, but here is where the rubber meets the road in terms of the past, likely rhyming with the future in some form or fashion. This is a logarithmic price chart, again from the start of 1970 to yesterday, in terms of the silver price. The black lower price line is how silver's price has added up trading during COMEX hours over this large time span, generally moving downward over time from $1.92 an ounce to now 15 cents an ounce aggregated. The red line is simply the opening price of each day on the COMEX, so it's basically the spot silver price throughout these nearly 53 years running along. Finally, the top blue line is the silver price outside COMEX trading hours, having run from $1.92 an ounce starting in 1970 to now nearly $300 an ounce over this same lengthy time frame. When I study this chart, and I do so often, I see 4 distinct time frames in the past in which those betting long silver, or those that wanted to see the silver price rise, consistently won out for lengthy durations of time. Basically, during these 4 distinct time frames, you can see outside the COMEX silver price blue line above had a collision with the red spot price line. All 4 time frames looking backwards were good time frames for silver bulls to lock in and take some profits on bullish silver bets they had made. This moves us to the next 5th era, or the coming time frame in which the red and blue lines will meet again. There is only one example of the blue line falling in order to meet the red spot price line. That was during the early 2000s, and they touched from 2006 to early 2008, the 3rd time frame on this chart. That was more of a disinflationary environment in the early 2000s, leading into that silver bullion bull run, where spot price basically 4-folded over that time frame. But my contention is we're moving into a different era. Given that we are in a more secular price inflationary regime akin to the later 1970s, we'll be moving higher. My contention is that the meeting between the blue and red lines will be moving high, akin to the way that they did in the late 1970s. This time, there are millions of retail silver investors all over the world buying physical silver bullion. And it's not merely a few leveraged Hunt brother billionaires to scapegoat after the fact on the COMEX. By when and exactly how high spot silver will have to climb to eventually meet again in our future, that's impossible to say. But my patience could carry myself into the next decade if it somehow took that long for them to meet. There has never been a larger spread in percentage terms between the blue and red lines on this chart, and this chart today still screams that there is opportunity for those who are getting into and prudently positioning into silver, especially if you're patient with long time horizons and without time decay. Of course, if we somehow go into some hyperinflationary nightmare scenario, you can pretty much toss these charts out the window because they're simply going to go straight up and off the page. If that terrible situation comes to pass, there won't be many fiat currencies you're going to be willing to want to trade for bullion at the time. In real value terms, silver bullion today is still relatively dirt cheap, and I believe it continues to offer one of the best asymmetric, high potential upside versus limited downside risk bets in the entire financial world today. So where and at what silver's future nominal record price peak will it reach in fiat Fed note terms? That's not as important as simply knowing in real value terms, silver will one day buy way more in real goods, services, and other asset classes than it does today. I'm sure the late great Scott Menard would agree with that statement. That is all for this week's SD Bullion Market Update. Merry Christmas, and as always to you out there, take great care of yourselves and those you love.
If you enjoyed this content, be sure to give our video a thumbs up. To keep getting bullion-related news and industry insights, be sure to subscribe to our channel. Finally, hit that alert button so you know when we publish fresh content.